Let's be real. The market in 2026 feels like a complete minefield of conflicting headlines, right? One day, AI is everything. The next, a recession is just around the corner. So, in this explainer, we're going to cut through all that noise. We're building a clear roadmap, not just for what to do, but more importantly, what to avoid. Let's get right into it. Okay, so let's start with a really important question for you personally. Is your portfolio built to react to the daily news cycle, all the hype, or is it built on a solid foundation, something designed to actually last a decade? How you answer that is going to define your success, not just this year, but for a long, long time. So here's our game plan, our resilience roadmap. First up, we'll talk about why the old market rules just don't apply anymore. Then we'll get into the new forces you absolutely need to understand. From there, we'll actually build a strategy with three key pillars, expose the value traps you have to avoid, and finally, chart a path forward that's all about discipline, not drama. Okay, first things first, we have to talk about the end of what we call the casino market. For the last few years, it kind of felt like you could place any bet on the table and walk away a winner. Well, that era is over, done. We're in a market now that rewards skill and discipline, not just, being in the game. And this tells the whole story. Between 2020 and 2024, you could practically throw a dart and hit a winning stock. Seriously, 90% of companies were up. But now, we're looking at a world where almost 40% of companies are in the red. The house edge is back, which means the market is way, way more selective. You can't just show up anymore. You gotta have a real plan. So, what's behind this massive change? Well, that brings us right to our second section, what we're calling the Great Rebalancing. There are some incredibly powerful new forces at play, and getting a handle on them is the absolute key to managing your risk and finding real opportunity. And JP Morgan just nails it right here. It's this collision of three huge forces. You've got AI, which is promising these massive productivity gains. Then there's global fragmentation, which is basically rewriting all the rules of global trade. And finally, inflation that's just stickier than anyone expected. Understanding how these three things crash into each other, that's the whole game right now. And here's the bottom line, the direct consequence for you. The old playbook, it's broken. The idea of just buying a simple mix of stocks and bonds and then, hoping for the best, that's just not going to cut it anymore. These three forces, AI, fragmentation, inflation, they're creating totally new kinds of risks that demand a much smarter way of building your portfolio. So if the old playbook is out of date, what does the new one even look like? Well, that takes us to the real heart of our roadmap, how to build a fortress portfolio using what we call the three pillars of resilience. Our whole strategy is built on these three foundational ideas. First, we anchor the portfolio with high-quality income. Simple as that. Second, we hedge against inflation and all this geopolitical risk with real physical assets. And third, we find smart ways to grow beyond just the obvious, super crowded trades everyone's piling into. Pillar one is simple. As Vanguard says, bonds are back. I mean, for the first time in what feels like forever, high-quality bonds are offering real after-inflation returns. They're not just a boring diversifier anymore. They are a legitimate source of income and a really powerful defense if that big AI boom starts to sputter. Pillar two is all about the physical world. Look, in an age where supply chains are fracturing, tangible assets, things like energy, commodities, infrastructure, they matter more than ever. They give you a real-world hedge that digital assets just can't, protecting your portfolio when global tensions start to flare up. Now for pillar three, finding smarter growth. Just look at this data from early 2026. While the tech-heavy NASDAQ is basically flat, smaller companies in the real economy, I'm talking manufacturing, infrastructure, energy, they're actually leading the way. This is a huge signal of a shift toward quality value stocks and international names. Companies using AI for efficiency, not just for hype. Okay, but knowing what to own is really only half the battle. You also have to know what to avoid. And this brings us to the most critical warnings on our roadmap, the value traps of 2026, where a so-called bargain is really anything but. So let's get crystal clear on what we mean by a value trap. It's not just a stock that's down, no way. It's a stock that looks cheap for a very bad reason, because its actual business is falling apart. Buying into one of those is like trying to catch a falling knife. You have to be able to tell the difference between real innovation and just unsustainable hype. So the first trap is chasing every single hot AI stock without ever looking to see if they actually make money.
The second trap is the complete opposite, investing in old-school legacy companies that look cheap but are totally failing to adapt to the AI revolution. Both of these are a fast path to losing your money. And all of this leads us to our final and maybe most important section, the survivor's path. Because look, having the right assets is only half the equation. It's having the right mindset that really determines if you're going to succeed. It's about choosing discipline over drama, every time. This image here is what we call the survivor's curve. It shows two very different paths. You have the gambler's path, always chasing the peaks and the hype. And then you have the survivor's path, which is all about building a solid foundation. In 2026, the gap between where those two paths end up, well, it's wider than it has ever been. Which brings us to our core message here. The steady hand approach isn't boring. It is smart. It's about focusing on what's probable, not just what's possible. It's about letting a sound strategy and the power of compounding do the heavy lifting, instead of trying to hit a home run on every single trade. You know, this disciplined mindset, it's the heart of our entire philosophy. And if this approach resonates with you, then we want to invite you to join the Survivor Circle. Subscribing is basically your commitment to staying rational when everyone else out there is panicking. Because that's the ultimate goal, isn't it? Building a portfolio that can survive the pressures of today so you are in a position to seize the massive opportunities of tomorrow. Thanks for watching and stay resilient.